Invest Africa, proudly brought to you by KPMG.
Hello and welcome to this week's edition of Invest Africa. I'm Nozi Pombandra. Now, the SADC region is lagging behind the rest of the continent in providing energy to its rural residents. Only 24% of rural areas in SADC member countries are electrified compared to the 36% achieved by the East African Power Pool and the 44% by the West African Power Pool. Philani Nyalunga filed us this report.
The Southern African Development Community has an abundance of renewable energy sources. Despite this, the region is lagging its peers on the continent in widening access to energy services.
Access to electricity, for example, is a major challenge. If we look at the SADC region, access to modern energy services or modern electricity can be as low as 20%.
The SADC region currently has installed power capacity of 55 gigawatts, of which 74% is provided by coal, 20% by hydropower, 4% by nuclear, and 2% by diesel. However, there are plans to expand the grid so that peak loads go up to 77 gigawatts by 2020 and 215 gigawatts by 2030. This presents an opportunity for investment in the sector, but one of the biggest challenges facing investors is policy within the region.
The biggest constraint is policy uncertainty and incoherence. The investors who are coming into this region need some assurance that there will be some stability in policy making. So, for example, in South Africa, we're continuously seeing the shifting sand of policy, and it's hard to predict where this policy is going. And in many cases, these policies contradict each other. And this creates a lot of uncertainty to investors or potential investors who wish to basically invest here in Southern Africa.
Infrastructure development is also a big hurdle in the pursuit to light up SADC.
There are a number of components to that solution. I think the one is obviously to secure investment in the larger projects. There's enormous, for example, potential for renewable energy in the SADC region, things like hydro, solar, geothermal in some parts of the continent. So it's really about effective maintenance of existing infrastructure and getting those back up to their full capacity. It's also about securing an enabling environment for new investment for those large projects.
With industrial productivity steadily growing in the region, the World Bank anticipates that the demand for electricity will increase by 40% over the next 10 years. At present, most of the energy produced in the region is through burning coal, but the region has set targets to increase renewable energy, with plans for hydropower plants already underway in Mozambique, the Democratic Republic of Congo, Lesotho, and along the Zambezi River. Philani Nyalunga, CNBC Africa, Johannesburg.
Now, joining me in studio to explore the investment case of the SADC energy space is Dr. Calvin Kem, CEO of Nuclear Africa, Kalipa Mtati, Associate Director at KPMG. And in our Cape Town studios, we are joined by Cornelius van der Wal, Head of the Energy Department at Frost & Sullivan. Welcome, everyone, to the desk today. Let me first come straight to you, Kalipa. Let's unpack the relationship between energy supply and GDP growth.
Thank you, Nozipo. You see, in terms of the problem that we are having in this continent is that if you unpack the relation between the GDP and also the energy, the issues that you are having is that without power, there is no investment. Right. So whatever that you have on the GDP, it's difficult for us to grow, because if we can't invest in generation, in transmission, then there is no. It's impossible for us to grow our economies in the countries.
And of course, Calvin, as Kalipa makes mention of growth, we know that there's a lot of the international spotlight on Africa now, and it's particularly on Africa's economic growth story. And how much of this is dependent on the availability and the reliability of energy supply?
Well, Nazipa, it's very, very much. It's a very important question. I think one needs to look at a few figures. For a start, Africa is larger than China, the United States, and Europe added together. Africa is big. South Africa has also indicated that we intend to double our electricity supply by the year 2035. These are not challenges faced by countries like Germany, France, Italy, and so on. So what we must do is we must have the confidence to have African solutions for Africa. We must not look to the European countries and think somehow what they do is going to come here in the same mode. And therefore, as you indicated, we've got to go for reliable electricity supply. Now, Here we must not fall into the trap, for example, of too much of this reliance on thinking that renewable power will actually supply baseload power. It won't.
Right.
We are unique in that we need certain renewables to go into areas where we need rural penetration and so on, where wind or solar can be deployed. But to try and think that you're going to have wind and solar and so on instead of something like nuclear power, which is very reliable, is wrong. So we must have the confidence, not only in South Africa, but all African countries, African solutions for Africa. Look at our own analysis, look at what infrastructure we need, which does not necessarily mean a major grid. You know, I think there's going to be room for a lot of smaller radial grids that serve certain areas, bearing in mind these huge size differentials that we're talking about.
And of course, we will get into the debate about the alternative sources of energy, and nuclear being one of them that I see that you're quite passionate about. But before we do that, let's cross over to you, Cornelius, in Cape Town. And I want to pick up on the fact that out of a 365-day year, almost 56 days are lost due to poor power supply. How have you found, from a business perspective, this undermines our competitiveness, not only as a country, but as a region?
I think when we look at that number in particular, obviously we're not talking about South Africa. I think as South Africans, we are very aware that we have got power problems in this country, but it's not nearly the same as some of the countries to our north. Realistically speaking, it is very difficult to do business in an environment where you expect to have power cuts from anything from 4 to 8 hours a day. And therefore, a lot of companies are investing in backup power, such as diesel generation, and obviously the cost of that is excessively high. So it's making it very difficult for companies in Africa within the manufacturing space to compete with global players. And therefore we are shooting ourselves in the foot by not being able to support those companies with innovative people, productive staff, to be able to grow and to expand. And even despite that, we are seeing economies in the region expanding at an average of well beyond 5%. So there's a lot of innovation and opportunity in Africa, and if we can get the power situation right, we're really going to unlock the potential.
Of course, there's a lot of lessons that can be learned from other players on the continent. I think this week Nigeria had a big handover of about, I think, 15 of power stations over to private firms, and we'll get into the privatization conversation. But Kalipa, I want to come back to you from an infrastructure point of view. A lot of these projections that are made by governments when they look at, you know, X thousand megawatts targets that they set for themselves are dependent on whether there is infrastructure to carry those targets. Where do we stand as the SADC region right now in terms of our energy infrastructure?
You know, what I can tell you now, all our countries, we need to invest in generation. The demand is like has outstripped like the supply long time ago in each and every country. And you know, when you even go to other like continents, when you try to present like your statistics in Africa in terms of what is the installed capacity in each and every country, they just look at you. For them, that's the one power station.
Right.
And you are telling them that this is for the country. But I think the biggest challenge that we have, most of the people, they kind of overlook this thing. If you've been to these conferences, they keep on in the pipeline presenting the same project each and every year. And I think the biggest problem is companies and like also the AFTBs, these DFIs, and also the government, they need to invest in some preparation funds for the projects, like so to appoint the right advisors. Because without bankable projects, there's no way that project can be funded. If you take a bankable project to any bank, it'll attract funding just like that.
I want to take the funding question to Cape Town. Cornelius, I know, traditionally we've known that funding for big energy projects in particular have come from the public purse. Are we finding that the government is making or offering the correct incentives or appetizing incentives for private players to want to get into the space? And are the risks palatable for private investors?
I think with regards to governments, obviously most of the governments in Africa are struggling to meet their obligations, and therefore it's becoming increasingly popular to deregulate the industry, the electricity industry in particular, and to allow private industry to participate on an equal footing to either the country's utility or to other participants. We have seen and counted over 50 IPPs currently operational in Africa. We know that 17 countries have deregulated their industry. But is it enough? No, I don't think so. I think we have to be realistic in the sense that less than 5% of the investment that is required over the next 15 years will come from development finance institutions. So the majority of this investment is going to come from private industry. And if private industry is going to be involved in this, there will have to be some profit involved. And therefore, it is absolutely crucial for governments and everybody else to start looking at the off-taker markets of the electricity, because the electricity can be there. But certainly there are huge opportunities in Africa to utilize the hydro potential, etc. And I think that the governments that are doing the deregulation at the moment will see the benefits of that in years to come.
Calvin, let's come back to South Africa in particular and look at the structure of the energy sector. Especially in South Africa, we have this unique situation with Eskom being a player and a regulator and wearing so many hats at the same time. One, how do we get out of that particular situation so that the industry becomes more competitiveness? And are there lessons that can be applied into the broader region?
Well, Nazifa, I think what's very important when one is looking at an energy mix is that you do have a mix that's appropriate. As I indicated, I'm very much in favour of us going ahead with the declared nuclear program of the government with all possible speed. One must have a look and see that nearly all of South Africa's electricity is produced up in the northeast where the coal fields are. The distance from Pretoria to Cape Town is the same distance as Rome to London. We send half of the electricity of Cape Town down from that far away. The other half is nuclear. We have to look at all of this and have energy solutions for us. That includes having certain renewables in the right place at the right time, and not kidding yourself that these are going to produce baseline power down in Cape Town, for example. They are not going to do that, and that's where we're partly on the wrong track. As far as companies' investment is concerned, for example, it's quite possible that we could have a separate nuclear company. There's numbers of others. There's no reasons why we can't have large energy companies, but they must be, as Cornelia said, it must be viable. It mustn't be something that's a dream that we've heard about through the grapevine and through popularist posturing around the world that we're going to run the country on sunbeams and breezes and things. That's not going to happen. We've got to be realistic so that there is genuine profit in it, that people want to go there of their own accord.
Kalipa, do you agree that it is not going to happen, as Calvin says, that we can't run the country on breezes? And basically, I want to get to the viability of alternative sources.
Look, the one thing that I agree with him on is the base load. I mean, we need to have base load, meaning nuclear, coal, hydro. I mean, for us to have to run the mines and which brings more of the economy, we need base load. So this dream of thinking that the renewables is going to substitute like base load, I agree with him on that one. That is very true.
I hear a big but coming.
No, but I think for me the biggest problem in terms of no, I agree with that. No, I agree with that. I think what I wanted to mention was, I think what is the, as mentioned before, the biggest problem with the investment coming in here is the policies, and secondly is the tariffs. As you may know that in the SADC we've got the lowest tariffs compared to the East Africa. So that is the problem. And I mean with those low tariffs, it can't be profitable, especially if you're going to finance the projects on project finance basis. Then you have a problem, because any investor that is a foreign investor that is going to come into the continent, they are here for their returns. So if the tariffs are so low, then it becomes like a bit of a problem.
Cornelius, let's come back to you on this point that Kalipa has made about the regulatory environment in particular. We are seeing a very strong trend towards a multi-country focus to getting the energy grids up. So you'll have the collaborations between South Africa and other countries in the region. Is this a viable approach for investors? How difficult is it for them to have to navigate through the regulatory frameworks of multiple countries before they go in and put the funds behind the project?
Yeah, I think we have to look at a short to medium and a longer term sort of a scope when we talk about this type of thing. In the short to medium term, there won't be interregional trade in a significant way, energy speaking, simply because all the countries in the region has got a deficit, and therefore all of these countries will have to invest in their local infrastructure first, and maybe somewhere in the future there might be a spot market. I just want to come back and talk about the notion that renewables can't be part of a base load solution, and I think that there is this thinking that renewables can't be part of a base load solution. It can be part of a base load solution, but then it has to be chased by an appropriate technology. And an appropriate technology to support renewables would be gas, for instance. So it's absolutely crucial that as Africa we start looking at more gas infrastructure. The recent finds that we've seen on the east coast of Africa in particular can play a major role in this, and the potential for shale gas in the Karoo is another opportunity for us. So we have to have this energy mix, and we have to make a decision on which way we're going to go. So I'm not saying we shouldn't do nuclear, we shouldn't do coal, we shouldn't do renewables. What we should be doing is say, sensibly, we need reliable, affordable electricity. There's no point in talking about profits if we don't have industries that can make use of this electricity. And therefore, take a step back, make sure that we are implementing the right plan rather than doing a little bit of everything, because that will definitely be the wrong plan.